So let's talk about the supply and demand zones, what they are. They are basically levels of the market where there is a huge imbalance between sellers and buyers, right? Meaning that, for example, there are 1,000 buyers and let's say 20 sellers. What's gonna the price do? Basically, it's gonna go up. The same applies for the supply zone, that there are 10,000 sellers and 1,000 buyers. The pressure is clearly down. Therefore, the market is going to go down. How you can understand whether the pressure is go up, down, how you understand the imbalances? The following way. Let's go and first check the demand zones, how they are created and how we think it's going to work. First of all, what we need to do is find levels where there's a consolidation or a fight basically between the sellers and buyers, and this is something like this, right? So there's a huge fight that they are trying to go up or down. The buyers are trying to push it up, the sellers are trying to push it down. What's here? Here we have the following. As you know, we have stop loss here and stop loss here, because if the market goes down, for example, for the buyers, here will be the stop loss so they don't lose money, right? So they get out of the market. The same applies for the same here. If the market goes up, anyone that is selling doesn't want really to get minus 300% or whatever on their account. Therefore, they put the stop loss a bit above of the consolidation level, the fight level that we talk, and basically that's how it works. So the next thing that we need to understand is the following. Because we are talking about the demand zone, basically we are going to see a breaking level, which is definitely also touching the stop loss level, taking out all the sellers and keeping the buyers at this level, which could be, for example, $1.2 or whatever, right? And this could be $1.1. So the range of $0.1 will be the range of the demand zone. So from here, we have three different scenarios. One scenario should be something like this, that the pressure is so high, the intensity of the trades are super high that it just skyrockets like crazy. The second option should be something like this, that isn't skyrocketing, but it's growing. It's growing slowly, which is not that good. And the third one will be the turtle one, which basically is slowly growing without thinking about anything. Therefore, we are not interested either on this one or this one. We need to find always breakouts that goes up as high as possible in the shortest term. Why? Because that shows us the imbalance, how big is. For example, if this goes like this, what's showing the chart itself, naked chart, right? That the sellers and buyers are pushing a bit here, a bit here, a bit here. So there is no huge imbalance here, right? The second one, for example, the imbalance is a bit more higher, right? So clearly you see that the buyers are dominating this, but isn't the way you would like to dominate. And here you see that there's no sellers here. Everyone is buying. Therefore, this is the pattern that we are going to be looking. So the same applies for the supply level, right? So let me just clean this up. So the supply zone is the following. We get a fight, a consolidation level, which can be 1.1 and $1.0. Therefore, we have the same stop loss here, stop loss here, stop loss for the sellers here, stop loss for the buyers here. So in case it starts moving down, the buyers are out. Again, three scenarios. It could be something like this, which is what we are looking for. Could be something like this, and could be the turtle one, which we're not interested in that one. The second one is pretty much the same. Again, they are trying their best, but in any place it can go up. Therefore, nothing we are looking for. This is the place we are looking for. Why is that? So let me explain why it's important to find this level. Because when we, for example, go, let me write it here, draw it here. Whenever we start seeing something like this, right? Here there are, let's say, 5,000 sellers, and because of this, we got 200 buyers. But previously, maybe we had about 5,000 or 4,000 buyers, which they gone because of the stop loss, right? So as soon as the market goes up, let me just write it like this, okay? We have a zone where, guess what? No buyers are here. So here, all the buyers are gone, and here we have a huge selling pressure down. Therefore, of course, here there is a huge buying pressure here, 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 here. But as much as the price goes up, they are finding these sellers. These sellers are here, so they are pushing it down because there's no buyers here. Guess what? All the buyers that are coming here, they are gonna be taking profit here. Otherwise, the market is gonna go down because of the huge imbalance here. Again, here can be 200, maybe 400 to 1,000 buyers, but the huge pressure. Why is a huge pressure? Because we see a super falling price. That's important. It's not an average downtrend. It's just crushing the market. So as soon as we are here, guess what? The market is gonna go down. And you, by just selling here, you have at least 80+ percentage of probabilities to win that trade. Your stop loss, again, should be somewhere around here. Therefore, you are not risking too much. Is it clear? Because I want you to understand the imbalance, how it's traded, because again, we see here that they took out the buyers, and here there are no buyers. Therefore, as soon as the market reach out as much as possible, then it's gonna go down. Can it continue going up from here? Yeah, of course it can, because as soon as this touches, which is the fresh level, the first touch is the most highest chances to win. The second, third could be again some drops, but not that high. And again, the probabilities of this breaking this level on the second time are much higher. But we are always trying to find the fresh levels to buy these levels or to sell these levels. I hope this makes sense. So let's move on to the next one.